Guys, this is not easy stuff, but these problems do come up with frequency. You need to have a good handle on it, okay? You need to have a good handle on it. So, now that we've looked at that issue, if you turn back to code section 162, we have 162, A1, A2, and A3. And the authors now are going to go through 162, A3, rental expenses. And we have storage to state. Not a hard case to follow. Not one of those kind of cases you can name and drop. But storage to state. Anyone have a chance to read this and wants to talk about it? What happened here in a nutshell? Costo? Okay, say it loudly so people like Tina can hear you.
I think there was a fire sprinkler installed at the taxpayer's plant.
Okay, so taxpayer installs a fire sprinkling system, right? Keep going.
And it was an instrument. It was a lease form of a contract. And we used it for 5 years.
So it's framed as a lease for 5 years. And the taxpayer would like to deduct the lease payments, right? Now normally, if you make a structural improvement to a building, you have to depreciate the asset over its useful life. And if it's a commercial building under code section 168E, commercial buildings have a class life of 39 years. So normally you would have to depreciate it over 39 years, right? Okay, keep going, Costo.
So then we tried to depreciate it. Tried to take $269.64 depreciation.
So he doesn't try to depreciate, he tries to deduct the rental payments of $1,240. And over 5 years, where a normal sprinkler system, right, might cost about $5,500, he's paying about $6,000, right? And after 5 years, what happens? The lease sort of putters out. And would it be easy or hard to get a sprinkler system out of a building, guys? So do you think when this lease is over, someone's going to come back and take out the metal? No. Everyone agree? So what do you think the taxpayer's agenda really was here, Costo? What was the taxpayer trying to achieve? Being the cynic that you might be. Wasn't the taxpayer essentially trying to write off the sprinkler system over 5 years rather than 39 years, right? Because if you could pay the lease payments over 5 years, you're deducting the cost of the sprinkler system where normally you'd have to deduct it over 39 years, agreed? And you can see if I'm selling you a sprinkler system, it normally costs $5,500 and I'm going to collect $6,000 over 5 years, there's some sort of interest component, right? That I'm going to command as the seller. And what the court said, your who prevails? Who does? I'm sorry, Keisha?
Oh, I said the court.
So the court always prevails, but is it the taxpayer or the IRS?
Oh, the IRS prevails.
The IRS prevails, right?
Yeah.
Because this is just like if you recall the water case where someone says, leave me money in your will, and we'll call it a bequest, but it was really for payment for services rendered. Well, you can't, call a duck a swan, right? And this was really disguised payments, right? So the taxpayer loses this. The IRS is the winning party. Okay? Just keep in mind, we looked at chapter 12 in the assignment of income doctrine. There's an analog to that in the form of assignment of deductions. You remember how taxpayers used to try to plant taxpayers with low income tax brackets, right? With income, right? Because that would save taxes, right? If you could assign income people in lower tax brackets. that would save tax dollars. Agreed? Who would you like to assign deductions to? People in high or low tax brackets? High, right? Because if the person's in a 60% tax bracket or 40% more realistically, every dollar they can deduct saves 40 cents, where if someone's in a low, say 10% tax bracket, they'll only save 10 cents, right? So the authors of our textbook talk about maneuvers taxpayers have tried to utilize to assign deductions, not income, assign deductions to related parties, right? And in some cases, courts have respected it, some cases have not. All right, and then they moved on to expenses for education. Expenses for education. If you looked at Code Section 162, Code Section 162 is silent as to what is deductible in terms of education expenses, okay? Right, if you read the statutory language, you really, if you don't mind me saying, would be clueless as to what's deductible in terms of educational expenses, right? But in stark contrast, if you took the time, effort, and energy to read the regulations under 162-5, which if you could open right now, that'd be terrific. 162-5. Entitled what? Expenses for education. You think this is relevant? Well, if this isn't relevant, right? Nothing is. And generally, educational expenses can be bifurcated into two baskets. And not surprising, like travel expenses, you know how travel expenses could be personal expenses or business expenses. Everyone agree? Travel expenses could fit into one of those two baskets. That's when it comes down to educational expenses. What are the two relevant baskets? Personal and business, right? Personal and business. And if you look at 162-5, B, 162-5B, it enumerates which expenses are non-deductible educational expenses, aka personal expenses, right? And personal expenses generally come in two flavors. 162-5B2, if there are minimum education requirements, are those expenditures made by an individual for education which is required of him in order to meet the minimum educational requirements, qualifications in his employment or other trade or business. So if there are minimum education requirements, non-deductible. If you look at 162-5B3, qualification for new trade or business. Qualification for new trade or business. Non-deductible. So if you incur educational expenses, qualify you for a new trade or business, not deductible. Now, admittedly, right, when you spend money on education, I don't care if it's art, you name it, every one of you probably would be better on your job, right? Because it gives you a little dimension, right? So if you took it, even you're a tax accountant, you take a course in European history, well, I could probably find a client or two who would be intrigued with your knowledge of European history, right? It might increase business. But is it more business or personal? It's probably more personal, right? You want to learn about, you know, the Renaissance or whatever the case may be. Agreed? So even if you can find a business angle, it doesn't make it deductible, right? So it's up to you guys to look at this regulation. Look at 162-5 if you haven't, and B. And there's several examples and they're useful to understanding what these limitations are. If you move to 162-5C, -5C. Deductible educational expenses come in two flavors. Maintaining or improving skills. You want to maintain or improve your skills, deductible. That's C1. So if you look at C2, if your employer has certain requirements that he, she, or it needs you to meet, deductible. Right? So we have two classifications of non-deductible, two classifications of deductible expenditures. And if you look at 162-5E, says travel away from home, it sets forth the parameters that if you have to travel as part of your educational expenses, meaning you have to go to a location to learn certain things that are deductible, then your lodging, meals, and your lodging, your meals subject to the 50% limitation are also deductible.
That's the difference with other fees, that we don't have to deduct the 50% from the lodging. Only for education.
Lodging is never 50%. If it's deductible, it's deductible in total. So, by the way, your expenses here, Stephanie, tonight, deductible or not?
Deductible.
Deductible. Why?
Because it is under C1, which is maintaining our living skills.
Right. So I hope I made a lot of your nights tonight, right? Everybody great? Should be deductible, right, Nick? All right, say it loudly, Alicia, otherwise people are going to think right here.
Deductible on Schedule A?
Why? Where else would you put it? Schedule A. It's going to be a miscellaneous itemized deduction, right?
Also, the driving from home to here is deductible.
Is it drive?
No.
No, that's personal.
Well, from your employment to here, probably you could justify a deduction, but again, it's got to exceed the 2% floor because you can't live here and you're deducting from your place of work to come here in pursuit of a trade or business expense, right? Right.
Do we get 1098 forms to graduate too? Like a tax form?
I believe so, but don't ask me about the information return. I don't know what's that. Okay. All right, Annetta.
When you say deductible, you mean just the credit for any expense like books, fees?
Yeah, books, tuition, and the like, deductible.
What about mileage?
I would argue that your mileage here from your place of work would be deductible. Right? I think the IRS would have a hard time challenging it, assuming this expense is deductible. 162-5E. How about Hilby Commissioner? What happens in this case? Louise, you remember what happened here? Yes, no, maybe? Didn't get that far? How about, in this case, Raphael?
I get that far.
Zach? James? Larry?
Yes. So the taxpayer was a school teacher in Virginia for 27 years.
So picture a school teacher in Virginia, yes.
And then he had the highest certificate, and that's in
I think it's
Virginia.
a she, by the way.
She or he?
She.
Yeah.
So she had the highest certificate certificate was going to expire. So she had to either take the college credits or pass an exam.
She could read 5 books and pass an exam, or she could take college credits, right? What did she choose to do? In other words, if she wanted to keep her job in Virginia, her employer required her to do one of 2 things. Take a test after reading several books, or take a college course. Larry, what did she do?
She went to the college to take the credits.
All right, she went to college to get the credits, okay? Everyone got the visual? She went to college to get the credits, and she incurred expenses, right? The IRS said no deduction. Why? What was the IRS's authority, Larry?
They were personal expense.
Yeah, this is a 262 because from the perspective of the IRS, very few people, right, did what she did. Right? Most people did not take courses, they passed the test. They read 5 books and essentially did a book review. All right, and the tax court on page 411, excuse me, in the indented language, in the middle of that page says, we cannot assume that public school teachers, quote unquote, or in italics, ordinarily attend summer school to renew their certificates when there's alternative methods involved, and it goes on from there. They deny the deduction. Is the appeals court happy here?
No.
Harry, who prevails?
The tax court said the expenses are deductible.
The tax court holds in her favor, and not the tax court, excuse me, the appeals court reverses the tax court, and under the regulations under 162-5C2, 162-5C2, the court rules in the taxpayer's favor. So taxpayer prevails here. By the way, just so you know, this doesn't happen too often, but there are other cases. I give you this case and another case. Who do you think put up the money for the taxpayer to take this position? Do you think there's enough money at stake here for the taxpayer to hire an attorney and fight this? Categorically not. Okay, I am sure the National Teachers Union put up money. We want you to take this deduction, or she was denied the deduction. She probably went to her union, and they said, we're going to sponsor you, and we'll pay all the expenses, okay? And you might say, well, does that happen anymore? Well, you may or may not know there's a case called Loving v. Commissioner. Okay, you can't make this stuff up. And most of you probably read about this case because in this case, there's regulations that were promulgated under Circular 230 that said that if you were not a CPA or an enrolled agent, and you had to take certain required courses, right? Okay, if you wanted to fill out tax returns. And several conservative groups said to people who are helping fill out tax returns, we want to take this case pro bono because we want to show that these regulations were not within the scope of Treasury Department's authority. So once again, the conservative group sponsored and they prevailed. And the regulations were deemed invalid. So sometimes if the issue is big enough, there's lobbyists out there who will bring these cases. Okay, so that's a case where the taxpayer prevails. How about Coughlin v. Commissioner? Coughlin v. Commissioner. What happens here? Coughlin v. Commissioner. Ronnie, you know this?
So, Kaufman is, worked in a law firm and specializing in tax matters.
Right.
And, he attended a conference, was it a conference?
And you went to a seminar, right, Johnny, at
Yeah.
NYU. Just for your information, this, in this case, was the 5th annual seminar. And even today, I think we're up to like the 80th seminar. So this is something that even today, you could go to NYU, go to the annual tax seminar. It's not cheap to go, but you can go. And the question is, right, Johanny, is that the issue was this expenditure back then deductible as a 162 expense? And whether the court, what was the IRS position?
That they didn't allow the deduction.
Right, personal expense. And what did the court say here?
So the circuit judge issued the opinion for the U.S. Second Court of Appeals and reversed the tax court and said that the expenses are allowed.
Right, the expense here was allowed. So this was under C1, okay, 162-5C1. If you incur an expense, you go to a tax seminar and you're a tax accountant or tax lawyer, hey, that's a legitimate expense, right? You're improving your skills, right? Deductible. Okay, everyone got it? All right. So let's look at the problems, guys, and make sure you really got it, okay? There's one thing to say you got it. Let's see if you got it. So, Johnny, at the end of the day, the taxpayer does get a full deduction, and no one's surprised by that outcome. Let's look at page 416, the problems here. We have A, B, C, and D. We're college roommates who, after graduating, went on to become a doctor, dentist, an accountant, and lawyer. In the current year, after some time in practice as an orthopedic surgeon, A, who is often called on to be giving medical testimony in malpractice suits, decides to go to law school to better understand this aspect of her medical practice. Okay? Role play here. So, pretend you're A, Jesse and Katie, deductible or not? Say again, say it loudly, Katie.
Deductible?
Jesse, agree or not? Agree, why? What would be your authority?
No, but she was already she was already giving testimony because she was at the school, so I feel like it's not for a new trigger business, it's for something she already did.
But she's a doctor. Wouldn't this qualify her for being a lawyer, Katie?
Yeah.
Jesse, you want to hold to it? Does this qualify her for a new trader business?
Yeah.
And maybe she hates practicing medicine. We don't know. And she's saying, gee, this will help her, but the reality is this is her path to getting a new trader profession. Probably not deductible, right? Right, Jesse? Because otherwise, again, anyone in the trader business could train for a new trader business and say, well, this is just training, helping with my existing one in some form or fashion. So you open up the door to making all educational expenses deductible. So your answer is Alice, non-deductible. How about question B? Or Barbara, enrolled in the course in postgraduate study in orthodontics, tending to restrict her dental practice to that specialty in the future. Anyone who have recently had braces wants to answer this question? Okay, no one's gonna. Anna? Wes, what do you think? Deductible or not? Anna, Wes? say it loudly, because
I'm
again,
sorry, they are deductible.
deductible, Wes, agree or disagree?
Think they're deductible.
You're whispering.
I think they're deductible.
Why? What's your authority? Nick, you were gonna say?
I can't remember because it is recurrent, on a current rate.
Jessica, you were gonna say?
Revenue, 7478.
Where are you looking, what page?
I don't remember what page it was on. Just because dentistry and
Oh, isn't orthodontics a specialty of dentistry?
Yeah.
That, just like you are trying to become trained with an advanced degree in taxation, right? So it's the same notion, so this should be deductible as improving your skills. The fact you get a degree in orthodontics doesn't make it non-deductible, right? You're still involved in dentistry. This is just a specialization. Specializations are typically deductible. Agreed?
Yeah.
Regulation 162-5C1. How about Kathy, enrolled in a part-time law school, so as to better perform her accounting duties in which law and accounting tend to overlap. And Katie, you're smiling, and Jesse, you're smiling. Can you play the role of Kathy again? Moving on from Alice now to Kathy. Katie, yes, no. Jesse, deductible, yes, no.
Let's say qualify her to be a lawyer.
Deductible or not?
Not.
Not. New trade or business, right? How about Denise? Took a leave of absence from her firm to enroll in an online course intending to practice exclusively in tax. In that case, Claudia, Lewis, deductible or not?
She was an accountant. I would say. And I'm an accountant, it would be deductible.
Deductible, Lewis?
Thank you, the business.
We're going for Denise, right?
I'm sorry?
Denise?
Denise, yes.
Not deductible? Because
Sean, why not?
she'll be going into a new field of like accountant instead of lawyer?
Well, no, she's already an accountant, and now she's trying to get an LLM to.
I thought Denise was a lawyer.
Oh, okay, I apologize. Denise is a lawyer, but she wants to specialize, right, in tax, right?
That is not deductible.
A form of law.
Oh.
Yeah.
So then,
That is not-
so then deductible?
There would be deductible. Denise is a lawyer, and she's going to specialize in the area of taxation, right? Try it?
But it doesn't matter that she's taking a leave of absence.
Doesn't matter. It's okay. Because if you look at question B, or question 2, Joe Henning, look at question 2, Joe. It says, some of Denise's expenses are deductible. And she's a practitioner in Seattle, Washington, who travels to Gainesville, Florida, to participate in its one-year L1 program. What expenses, in addition to tuition, books, may she deduct? By the way, hint, hint, where are the authors from this textbook from? Just if you had to guess. Yes, University of Florida, Gainesville. Yeah, James Freeland is from University of Florida, same with Richard Stevens. Okay, so 2 out of the 4 authors are from Florida, and they help run the Masters of Tax program there. So if you go there, not only, and Johanna, you take a leave of absence, you can deduct, in addition to your tuition, books, you can deduct the travel expenses to get there, 50% of your meals, and your lodging expenses, right? What's my authority? Regulation 162-5E. Question 3. Carl earned a bachelor's degree in education and he teaches world history in junior high school. In the current year, he contemplates a summer European tour, doing things that would be beneficial to his teaching efforts. He wishes to know if he can deduct his expenses. What do you advise? Because,
Personal.
say again, Tavia?
There's an aroma of personal.
There is an aroma personal. You have authority for that aroma.
274 or 164.
You tell me.
274.
Where do you think you look?
274. And
Not a bad idea to look at 274 M2, right, everyone? And you want to just open just for our edification? M2 says no deduction shall be allowed under this chapter for expenses for travel as a form of education. Growing up as a kid, I used to, with my parents, we would go away with a neighbor who was a psychiatrist. And maybe I needed the extra help, right? And we would go to these different countries, and he would claim the expense was a deduction because it made him better versed at understanding humanity and human beings, right? So all the trips, in his opinion, were deductible because it made him better as a psychiatrist. Now, Congress has subsequently instituted Code Section 274 M2.
So it's a new section, it's okay.
It's relatively new, not that new. Okay. How about dentist? Attends a 5-day dental seminar at a ski resort. All seminar proceedings are taped. The dentist skis on the clear days and watches the tapes on snowing ones. All right? We've all seen this on 60 Minutes and other news reports right around tax season, right? Would this be deductible or not? Michael, what do you say?
I would say it is.
It is? Alicia, you agree? Because
I would say it's really difficult to
it's difficult. I mean,
it looks personal, but he really goes,
it looks like it's not driven by business necessity, right? These tapes could have been watched in his den, right? So it looks like his presence there physically is more for being on the ski slopes than for being there for education, right?
But what if he has to be personally there to record them? I don't.
I mean, Alicia, look, without
It
thinking,
looks personal.
it looks personal. Probably is more of a sham, Michael. And I think the IRS would prevail if the taxpayer pushed this hard enough that this would be non-deductible personal expense. Because there doesn't seem to be a rationale or reason that he has to be physically in Colorado or wherever this is happening. All right, so to answer Alicia or Michael, I can't say definitively, but it certainly looks hokey, right? All right, so the authors now want to take us and see if miscellaneous business deductions, right? Miscellaneous business deductions. And they walk us through different code sections that might apply with respect to business meals and entertainment. Now, by the way, you might say to yourself, and rightfully so in my opinion, why should business entertainment expenses ever be deductible, right? Why should business entertainment expenses, if you take someone to the 7th game of the World Series, why should that be deductible? You know, if the tickets are $100 a ticket, you go to, well, let's say you take someone to a show. Why should Congress ever let the expenses be deductible?
I think because it also promotes the game itself. Like, let's say they have 80,000 tickets and 20,000 are business, you know?
Okay, so you're saying 1/4 are business.
Yeah.
But why allow a deduction? I mean, I don't think between us, I don't think they need the help of business to sell out stadiums, right? You guys probably know for a fact, hard enough to get tickets, and you end up on, what's the site for scalpers? South Pub, and you're paying 3 times the price. You're like, damn it, I shouldn't be paying so much. And if you want to be entertained, Katie, if you're on, if you want to Google this, if you put
I'm not
in,
connected.
I'm sorry,
I'm not connected.
are you not connected? Anyone connected?
I can look it up on my phone.
Okay. You can pull up if you want to be entertained out here. You know, Katie can tell you that if you put in J Solid Skyboxes and New York Times, if you want to do a little search like that.
I couldn't find it on YouTube, I tried.
Oh, aren't they gonna compare that to almost like deals made on golf course?
Deals made on golf courses. I am not a big fan of business entertainment expenses, and if you read this piece I wrote,
It was a piece, it wasn't yours.
this was not on YouTube. I think I told you by then. Maybe I shouldn't even mention this. I had this op-ed piece in the New York Times about the reason I am not a proponent of business entertainment expenses, because Alicia's right. In the last 10 years, lots of stadiums have been built, and much of the seating, not all the seating, but many more seats now go to corporate skyboxes, which makes it much harder for us common folks to get seats. And I wrote about the tax advantages in the op-ed piece, and talk about my naivete. I was asked by Fox News to do an interview, and I thought, gee, that would be fun. They want to hear about my perspective on business entertainment expenses. And talk about a deer in headlights, because it was me versus the three people on Fox News, and they took me to task. They were like, Professor, don't you think a lot of business goes on, and to Nick's point, on the golf course? And essentially, do you want to ruin all that business? And I was totally unprepared. So hopefully you will not find that on YouTube. I don't think you can, which is a good thing in my opinion. But in any event, the reason it might be deductible is that, gee, if you go with family and you spend $100 a ticket and you take your family of four, you and your spouse and 2 children, you might say, gee, this is great. We should get a $400, it costs $400, but you're getting $400 worth of marginal utility for those who had economics, UDLs, right? But if you go with yourself and 3 tax accountants like Jay Solid, oh my God, you're getting, instead of 400 UDLs, you're getting maybe 20 UDLs, because it's painful, to go, right? So the notion with business entertainment is that you don't derive the same satisfaction, and therefore it should be deductible. But Congress, under Code Section 274, and caps that deduction at 50%, right? Okay. So the authors talk about Code Section 274 as it pertains to luxury skyboxes. It talks about meals and entertainment. Can't be lavish or extravagant. Talks about all these sort of deductions about when you go with clients, what sort of meals will be deductible, won't be deductible. You guys have to read it. You have to read the regulations, right? I can't do that for you. I know for a fact you don't want me to sit up here and just start reading the regulations back to you, right? It's not going to be very productive. So you guys have to look this over. Uniforms generally are deductible, right? Because they're not for personal use. In contrast, if you wear suits to work, or you wear special dress clothes to work, if you're Hillary Clinton and you wear, what does she wear? What do they call it? Pantsuits, right? They're not deductible, okay? Why? Because you can wear pantsuits not only in the office, but you can wear them outside the office. It's just like suits, right? Same thing, okay? But uniforms, the expectation is you're not going to wear them Saturday night to a party, right? How about advertising? Generally deductible. How about dues? Generally deductible. Lobbying expenses. Lobbying expenses generally deductible. But
You mean bribery?
lobbying.
You mean bribery?
Hold on, let me see. I apologize. Under 162E, lobbying expenses are generally not deductible. I apologize.
Okay.
Not deductible, but there is an important exception that pertains to local lobbying that pertains to locally. All right? So, look, guys, you have to spend the time, effort, and energy to read through and make sure that you understand, right, how these kind of expenses, what can and cannot be deductible. On page 424, the authors want to give us a taste of this. So let's make sure you guys are with me on this. You have an employee spends $200 taking 3 clients to lunch at a local restaurant to discuss a particular business matter. The $200 cost includes $10 in tax, $30 tip. Each had 2 martinis before lunch. I'm sure very important business is being discussed. I don't know about you guys, at business meeting, anyone here, well, you don't have to respond to this. Drinking is just like a non-starter. I mean, if it's an important business meeting, I'll let the client drink. I'm going with the double espresso. I want to be on my game. I don't want to. I am not going to be drinking anything. To what extent are employee expenses deductible? Okay. To what extent are if you go with 3 clients and you spend $200, are those expenses deductible? Okay. Jeff, Gina, Ying, deductible or not? And if so, how much? Deductible. Jeff, agreed?
Yeah, up to 50%.
All right, Gina, Ying, just make sure you say deductible up to 50%. And just make sure you understand business is discussed. And just also one other caveat, okay? Under 274, I believe it's K, we just confirmed that HRJD K. Business meals, yes. They cannot be lavish or extravagant. So, you can go either extreme. Have any of you eaten in the restaurant, where is it, Columbus Circle, per se? And there's many restaurants like this in New York, but they have a fixed menu. How much is it per person? $400 per person. Okay? Fixed menu, okay? My friend got an $800 gift certificate. He didn't look at the menu, and he thought, oh, I'll bring my wife and my brother-in-law and sister-in-law. We'll have lunch. Yeah. He got a big surprise. All right? And he said it wasn't even that good. Anyway, that probably, in New York City, probably you could say it's not lavish or extravagant. But in contrast, if you go out to eat, and some of you may recall reading about this 3-4 years ago, a group of 4 employees went out to eat. What was the tab on their dinner? And here's another thing you could Google if you were hooked in. It was approximately $20,000. Why? They ordered wine. They also got fired subsequently from their job. But putting that aside, can you deduct a $20,000 tab? No, that would probably be lavish and extravagant, right? So it's got to be within limits. To what extent are the meals deductible if lunch is merely to touch base with clients? Would that expense be deductible if you're not talking business, but you just want to get together? And I know Anna's saying, right, Anna, the regulations specifically say that would be non-deductible. Now, let me, as a practical matter, is this an area which taxpayers are fairly aggressive? Yes. And even with business entertainment, you're supposed to talk about business before, during, or after. And let me just ask you, if you've gone on to some of these Broadway shows or go to a baseball game, and you're in a box even, do you think too much business is being discussed before, during, or after the game?
It's too loud.
Too loud. There's too much going on, all right? But again, if I were king for the day, I might disallow all deductions, but I'm not king today, yesterday, or tomorrow. So right now, pretty aggressive, but I do want to say, Anna, the regulations specifically say non-deductible. What results if employee sends the 3 clients to lunch without going herself, but picks up the tab? Well, if they're not there, they must, under 274 K1B, they have to be present at the lunch. You can't send someone for a business lunch, right, and you not be present. So it would not be deductible. What about a $20 Uber fare? Would that be deductible? Diana, what do you think? If you incur a $20 Uber fare. Yeah, it's transportation, right? Fully deductible. What results in A, if an employer reimburses employee for the $200 fare? So there's a reimbursement. The employee doesn't have income, right? They're just simply being reimbursed. But under Code Section 274E3, okay, the employer can take a deduction, okay? The employer can take a deduction, assuming it would otherwise be deductible. How about a business person who is in New York on business, each with 2 clients, and afterward takes them to the Broadway production of Hamilton? To what extent is the $600 cost of their tickets deductible if the price marked on the tickets is $100 each? A business person buys them from the hotel concierge for $200, okay? First of all, anyone see Hamilton in the?
Can't afford it.
Can't afford it. Yeah, I haven't seen it either, and it's probably gonna be, I always want to wait until they go on sale on, so maybe 20 years before I see Hamilton. Having said that, so no one's here has seen Hamilton? All right, well, I'm on that list too. Everyone come up with a number. What can you deduct here?
When you deduct $100, the original price was,
So how much can you deduct? Give me a total.
well, you pay $200 for 3 tickets, you can only, and there's only $100, you can only deduct the $300. Is it 50%?
Alicia?
Up to 50% of the contract.
All right, there's 2 different limitations applying here, right? Code Section 274L. Code Section 274L says you can only deduct up to the face amount of the ticket, right? So even if you overpay, you don't get a deduction. And then there's the second limitation, right? Under Code Section 274N, that limits the deduction to 50%, right, of the otherwise deductible amount. So here, the taxpayers, remember, they got 3 tickets, $100 each, $300 is the cap, but then the 50% limitation applies. So your answer is $150. Agreed? Agreed.
Section 274.
274A. Airline pilot incurs the following expenses in the current year. $250 for the cost of a new uniform. So in that case, Jackie, deductible?
Yeah, she's using it for work.
Yeah,
She's wearing it every day.
yeah. Not a personal, right? Didn't choose to want to be in the uniform. How about $30 carry for dry cleaning?
Yeah. No.
Why do you say no?
Personal, you could load the
dry clean your own suit or whatever, so it's not really.
Yeah, but it is a uniform, right, Karen? And probably company policy, they've got to look pretty spiffy in that uniform, right? And you might be like me, normally you wouldn't do it, but if your employer's requiring you to wear that uniform and the uniform's got to have the proper creases and all that stuff, you could probably justify that being deductible. How about $100 in newspaper ads to acquire a new job as a property manager in spare time? James?
No.
Why not? Say again?
Not that.
Why?
It's not part of this. I guess.
Well, this should remind you of if you're not carrying on the trade or business, right? And you're looking for a new or part-time job, you don't get a deduction, right? Doesn't meet the requisites under, I think it's revenue ruling 75-120 that we looked at. How about $200 RE in union dues, deductible or not? Do you agree, Larry?
I think it's deductible.
And Tina, who's right? Deductible, why, Tina? All right, 162 would permit, if you're not choosing to pay dues, say union dues or dues, say to the American, the AICPA, right? You're doing it to promote business, to be, in the know. So it would be deductible. How about $50 in political contributions to local legislator we hope will push legislation beneficial to airline pilots?
No.
All right, so Alicia says deductible, Nick says no. Why do you say no, Nick?
It's a lobbying club.
Okay, so generally, if you open up to 162E, 162E, in general, no deduction shall be allowed for any amount paid or incurred with respect to influencing legislation, right? So it looks non-deductible. But, hold on, Claudia, 1 second. Okay? Under 162E2, there's an exception from local legislation, right? Says that paragraph 1A shall not apply if, essentially, if you read this, essentially it's local legislation. However, the way this problem is framed, it's contribution to a local legislator, so it suggests that the exception apply. However, we don't know if the local legislator is applying for broader legislation. So the problem is written ambiguously. So it could go either way. I can't answer this, you can't answer it. I think the authors are just toying with our brains about what is or isn't. Claudia, you had a question?
Yeah, what if this would be a $50 donation for political campaign?
There's no donation. There's no deduction for $50 contribution or any contribution to the political campaign. How about $500 in fees to a local gym? Keep in shape. Okay? Keisha?
I would say non-deductible.
Why?
It's personal.
Yeah, but it's keep in shape for flying.
Keep in shape for flying, I mean.
But it's an air pilot. You have to keep a certain physical shape to be able to fly properly.
You know what I mean?
I've seen a lot of airline pilots.
Oh, they are. I would try to duck.
But the reality is, look, everyone would be a better fill in the blank if they were in good shape, right? I mean, it just goes without saying that exercise is a good thing, for anyone in whatever job you're in. But is it personal or business? And most of the time, it's more personal, even though it does help business, right? Now, if you're a bodybuilder, Arnold Schwarzenegger of yesteryear, you can justify bodybuilding, if that was your career. But if it's not your career, I think it's a hard deduction to take without being challenged. So your membership to Gold's Gym, probably not deductible. All right? Last segment, one more segment, guys. Business losses. All right? This is stuff we already covered, right? Code section 165. This is stuff we already covered. And it just points out what we already know. Losses must be realized, recognized, and allowed. It points out on page 427, code section 280, capital letter B. What does that code section say? That if you buy land with a building, say for 1.2 million, and you knock down the building, you know, you're going to put in a new building, you can't just you can't say, well, the value of the building was 200,000, and we're going to take a deduction because we knocked it down. You have to capitalize the cost of the building and the land because you knocked it down. So you're going to start off with land worth 1.2 million. Okay? So just code section 280, capital letter B, talks about limitations about how you're going to deduct certain expenses with newly acquired property. Page 427, 428, let's just take a quick look at these problems and we'll call it a night. Taxpayer has an automobile used exclusively in taxpayer's business, which was purchased for $40,000, and as a result of depreciation deduction, it has an adjusted basis of 22. The automobile is worth $30,000. Unfortunately, it was destroyed in an accident, and taxpayer received $15,000 of insurance proceeds. What is taxpayer's deductible loss under code section 165? Okay, so it was totally destroyed. This was not partial. It was totally destroyed, guys. So what was their economic, what did the taxpayer, what kind of deduction should the taxpayer be entitled to here?
7,000.
Say again, Costa?
7,000.
7,000, right? How did you get that?
You take the adjusted basis, and then you subtract the insurance proceeds from the adjusted
Right.
basis.
Normally, if they had no insurance, they would be able to deduct 22,000, right? It was a complete loss. They could write off 22,000. Agreed? Agreed. But here, they didn't lose $22,000, right? Of monies, so to speak. They really were out only 7,000, right? So the reportable loss here would be 7,000. Normally it'd be 22 if not covered by insurance, but here they were really out 7,000. What resulted if it had not been destroyed, totally been destroyed, but it retained $10,000 of value?
But we still got 15,000 from the insurance, yes?
We still got 15,000 of insurance. Well, needless to say, since the authors are kind here, your clients will not be, you would want to look at regulation 165-7B, right? If you look at 7B here, right? 7B1. In the case of any casualty loss, whether or not you incurred in the trade or business or any transaction entered for profit, the amount of loss taken into account for purposes of 165A shall be the lesser of either the amount which is equal to the fair market value of the property immediately before the casualty, reduced by the fair market value immediately after. So, how much did the fair market value go down here, guys? It went down by 20. Everyone agree? It went from 30,000 down to 10,000. Agreed? So that's the economic loss. Is 20,000, right? So we take the lesser the $20,000, or the amount of the adjusted basis for determining loss. So the lesser, the adjusted basis here is 22,000, right? What's the smaller of the two numbers, 20 or 22? 20, right? Reduced by the amount of the insurance we received. So here, Busto, we would have 20,000 minus 15, and the answer is 5. What's by authority? This regulation. Question C, what is the taxpayer's adjusted basis if the taxpayer incurs $17,000 fixing the automobile? What's her starting point? 22, right? Is that our starting point? Then what do we have to do? That's our starting point, but didn't we get $15,000 out from insurance, right? That's going to reduce our tax basis. It reduces our investment, right? The insurance that we receive reduces our investment. And then we also commanded a $5,000 loss, which reflects another reduction of our investment, right? How much does this equal? $2,000. Plus, under Code Section 1016, we made an improvement. So under 1016, excuse me, we improved it by 17,000. So our new adjusted basis is 19,000. That's good. Got that? All right. So, look, I know it's late. It's daylight savings time, or the opposite. So it feels like almost 10 o'clock here, Bob.